Welcome to your recorded flashcards. Question 1. What law deals with credit, APR, and advertising of consumer loans? The answer would be TILA, Regulation Z. Question 2. Which regulation prohibits kickbacks? That would be RESPA. Question 3. Which regulation requires the lender to cancel PMI when the loan reaches 78% LTV? That will be HOEPA, Homeowners Protection Act. Question 4. Which regulation prohibits fee splitting? It would be RESPA. Question 5. X is a letter used to describe which regulation? That would be RESPA. Question 6. RESPA is the acronym used to describe which law? That will be the Real Estate Settlement Procedures Act, RESPA. Question 7. What type of mortgage requires a non-refundable funding fee? That would be the VA loan. Question 8. What is the provision in a mortgage enabling a lender to demand full payment if the borrower defaults on the loan? That would be called the Alienation Clause. Question 9. What is the provision in a mortgage enabling a lender to demand full repayment if the borrower transfers the loan? That will be called the Alienation Clause. Remember, there's an acceleration clause and there's an alienation clause. Be sure you know the difference. Question 10. What does CFPB stand for? CFPB stands for the Consumer Financial Protection Bureau, the new sheriff in town as it relates to the mortgage industry. Question 11. What two laws created the CFPB? Where did it come from? That would be the Dodd-Frank Act and the Consumer Finance Protection Act. They came together to create the CFPB. Question 12. Which regulation is designed to help meet the credit needs of the communities in which it operates? That would be the CRA, the Community Reinvestment Act. That's the act that said if organizations and banks are going to be in the communities, then they have to give something back to the communities. They have to reinvest in those communities that they want to be located in. Question 13. Under ECOA rules and regulations, how many days does the borrower have to request a copy of an appraisal report if the application was denied? That answer would be 90 days. Question 14. Under ECOA rules and regulations, how many days does the lender have to provide a copy of an appraisal report once requested by the borrower? That would be 30 days. Question 15. If a loan application is approved under ECOA rules and regulations, when must a copy of the appraisal be provided to the borrower? That answer would be 3 business days. Question 16. Conforming loans follow the guidelines of which regulators? That would be Fannie Mae and Freddie Mac. Those are your regulators on the secondary market. Question 17. Which regulation requires the lenders to be equal when extending credit to borrowers? That would be ECOA, Regulation B. It says that the lenders must be equal. Hence, they can help you to remember that on your exam. Regulation B, they must be equal. That will be ECOA. Question 18. How old must a borrower be to qualify for a reverse mortgage? That answer is 62 years old. Question 19. Which regulation has the primary function of preventing identity theft? That would be FACTA, or the FACT Act. When they have the A on it, it just means Act. Anytime you see anything on that exam that says identity theft or custom identity, that is going to be controlled under the FACT Act. Question 20. Which regulation has Section 114 rules? That would also be the FACT Act. Question 21. Which regulation requires the creditor to verify the validity of any change of address received. That would come under Section 114 of the FACT Act. Question 22. What is the payment method used in a reverse mortgage that allows the homeowners to receive a monthly check while living in the property? That method is called the TENURE Method. Question 23. What is the fraud scheme where a borrower uses someone else's name to purchase property, but that person will not be living at the property? That is called a straw borrower. Question 24. What government lender insures mortgages? That would be the FHA. Remember, the FHA does not lend money. The money comes from the approved lenders. The FHA insures those mortgages. Question 25. What government lender guarantees mortgages? That will be the VA loans. They do not loan their money either. The money comes from the approved lenders and are guaranteed by VA loans. Question 26. What government lender loans money to fund purchases in rural areas? That would be the USDA, the United States Department of Agriculture. They actually do lend money for those loans. Question 27. What is the value remaining in the property after all liens and debts have been paid off? That is the equity. That's what we all want to share. That equity, when everything has been paid off, any remaining money is your equity. Question 28. A borrower is refinancing his home. How much time does Reg Z give him to change his mind? When the borrower is refinancing a loan on a home that they already own, there is a rescission period, and that rescission period is 3 days. Rescission comes from the word rescind, which means to take back. Question 29. Which regulation established the 3-day right of rescission rule? That would be TILA, Truth in Lending Act, also known as Regulation Z. Around here we call it TILA the Godzilla. Question 30. Redlining is part of which regulation or law? Redlining comes under the Fair Housing Act. Question 31. Blockbusting is part of which regulation or law? Blockbusting also comes under the Fair Housing Act. It refers to people trying to get others to sell their homes by some panic method, telling them that other ethnicities are going to be moving in and that the value of the homes are going to be going down. Question 32. Steering is part of which regulation or law? Steering is also a part of Fair Housing Act, often done by real estate agents trying to put people where agents think that they belong according to their ethnicity. It comes under the Fair Housing Act and it is illegal. Question 23. Trying to convince a homeowner to sell his home by implying that another race or ethnicity is moving into the neighborhood is called, that's your blockbusting and your panic selling tactic. Trying to convince a homeowner to purchase in a particular neighborhood based on his race, religion, or ethnicity is called, that is your steering tactic. And question 35, refusing to make loans on a property in a certain neighborhood for discriminatory reasons is called redlining, often done by banks and lenders. Question 36, what does HOEPA stand for? HOEPA stands for Home Ownership and Equity Protection Act. Question 37, HOEPA loans are part of which larger regulation? HOEPA is a part of Regulation Z, TILA the Godzilla. Question 38, high cost loans are part of which regulation? Also Regulation Z, TILA. We just like to have a lot of fun with it. It really has nothing to do with the Godzilla, but people tend to remember that, so we tell them Regulation Z is TILA the Godzilla. Question 39, high price loans are part of which larger regulation? That will be Regulation Z, also TILA. Question 40, Section 32 loans are part of which regulation? Regulation Z, TILA the Godzilla. So you see how it's such a larger law with so many other laws and added onto it. That's why we call it the Godzilla, because it's a pretty big law. Question 41, Section 35 loans, a part of which larger law, regulation. Also, TILA the Godzilla, Regulation Z. Question 42, MDIA Act is part of which larger regulation. That also falls under Regulation Z, TILA. Question 43, Mortgage Disclosure Improvement Act is part of which larger regulation? Regulation Z, also TILA. So you guys can begin to kind of see how it's such a large regulation, so how we relate to it like that. Question 44. What is another name for annual percentage rate? That will be the effective rate. Question 45. What is another name for the interest rate? We have two names for that. We can call it the note rate, or sometimes we call it the nominal rate. Question 46. PITI, principal, interest, taxes, and insurance, divided by gross monthly income is referred to as what? That is your housing ratio, or your front-end DTI, front-end debt to income ratio. Question 47, PITI plus monthly debt divided by gross monthly income is referred to as what? That is your total obligation ratio, your TOR, or your back-end ratio, back-end DTI. Question 48, how long must TILA disclosures be kept? This can be kind of tricky, so if it just says TILA disclosures, that's for 2 years. But there are two exceptions. The LE, which is a TILA disclosure, is kept for 3 years, and the CD, which is also a TILA disclosure, is kept for 5 years. But if they don't specifically ask for them by name, then the answer to that question is 2 years. Don't forget that. Question 49. What is the maximum amount of time that negative info can remain on a credit report? That answer is 7 years. Question 50. What is the maximum amount of time that a bankruptcy can remain on a credit report? That is 10 years. It doesn't matter what type of bankruptcy, Chapter 7, Chapter 13, Chapter 11, 21. The answer to that question is 10 years.